All right, come on in. We're gonna wait for the live studio audience as always. If you were watching the replay, you could just fast forward to the good stuff a couple minutes from now. I am a retired 18 years, multi-decade Wall Street analyst, served companies owned by Jim Cramer, George Soros, etc. If you watch the show, you know the spiel. If you don't, then watch the show and you'll find out what we're all about. It doesn't look fancy, but we got 10,000 followers around the world for a good reason. Haven't closed a stock position at a loss in our priority spreadsheet. We'll show you that in over 2 years. I'm picky. I'm picky. But we can talk about all sorts of things. It's not just about being picky. It's about teaching you what goes on in the stock market, what's going on with the professionals, the real deal, not what colleges teach you. It's BS. Trust me, I went to college. It was BS. Not what CNBC tells you. That's BS too. Okay, I was losing money year after year after year because of college, because of CNBC, until my mentor, a real Wall Street pro who was trained by a Wall Street legend, took me under his wing and taught me the real. Next thing you know, 10 years later, I'm a millionaire. A couple years later, I'm retired. Next thing you know, 7 figures a year, millions per year. Retiring in Miami Beach in a penthouse. And what good would I be if I didn't pass that on to y'all? That's what I do every week. We got audio, we got video, boom, we got audience. Beautiful. I appreciate all y'all out there, you veterans. You know how to bring in to share the invitation. Please do that, by the way, if you haven't already. All right, somebody in the chat. Please go into the chat, share the invitation, help me out, get the audience in here so you do your part, I do my part. And with that, right, a little not as smooth as usual because we had last week off, shaking off the rust. But you know what it is. It's Friday, it's Money Mark, it's Stock Talk Live, it's SpaceX, to the moon, to Mars, and all that, right? We're going to talk about that. We're going to talk about what I do best. And we're going to talk about what I know about as well. Not the stuff that I do necessarily for myself, right? There's a difference. There's a difference. What you see in my spreadsheets, and let's actually put this on the screen right here, right off the bat, just so we know, right? Before we move any further, you acknowledge that you read this or have somebody else read it to you, and you are good with whatever it says. I'm not a financial advisor. I'm not your registered financial advisor. None of that stuff. This is all for entertainment, education purposes, and research. Blah 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 blah. All right, we good with that. All right. Now with that being said, we got a little spreadsheet here. We do have some names that are in the loss category as of right now. I don't expect that to continue, right? But we haven't closed one at a loss since before my daughter was born over 2 years ago. You see this? This is May 10th, 2024. Right? There's the last loss that was closed out. A pick that I made in May 3rd, 2024. That was a loss. That company actually ended up getting acquired ultimately, but I took the loss on that one. That's the last one I took a loss on. These two, not taking a loss on it. And I don't expect I will. There's every chance that it could happen, but we'll see. This is the result of being picky. This is the result of doing professional Wall Street research. There's a lot of names you're not going to see on this picky sheet that I did and have talked about week after week, month after month, and even year after year. This whole 3 years that you veterans know what I've been saying, which is AI is not a bubble. And as of right now, I can still say AI is not a bubble. I have said a few weeks ago that there are many stocks that have become bubblicious. Okay, so the bubble finally did arrive in Wall Street, right? But it's not a full-on bubble. And I think it's going to continue, frankly. So there's two ways to play this, and we're going to talk about all that on this show. And one is to keep playing it picky with the research that I do on the names that I pick, the low-hanging fruit that I find, a lot of which don't end up on the spreadsheet right away, right? A lot of you know these names, some of these names, like Energus, I started talking about Watt in the single digits to let you veterans have a chance to do your own research, because what I don't want to do is just come out here like the pumps, be like, we got a new pick today and here it is, you ready? And have it go to the moon instantly. That used to happen in the past to my picks, and I didn't like it, right? Because one of my rules is don't chase. When you chase, you often end up losing money. And I don't want you to lose money. I want you to make money. I'm not here to make money for me. I'm going to make money no matter what. I'm here to pay it forward, to help other people make money. That's what makes me feel good. When I get those emails from y'all, which I get every couple of weeks, there's a new email. Mark, I became a millionaire today. Thank you very much. Mark, I made $500,000. Thank you very much. Mark, I bought a house. Thank you very much. Right? That's what makes me feel good, especially because I do it without subscriptions, without sponsorships, without advertisements, without any of that BS that the 10,000 clowns out there are doing to you. And that's the problem. CNBC wants your eyeballs. They want to sell you advertising. The colleges, they want your tuition. The 10,000 clowns, they want you to buy their stocks so they can make a little bit of money off of them. It's called scalping. Okay? So what I did starting in 2015 was swear off all revenue and make sure that this show makes it clear that I do not want you to chase names. I want you to research the names. I want you to take your time researching them. And if I have to talk about a name in the single digits and not put it in this spreadsheet until it's 1450, well, that's what I'm going to do. And it worked out really great with Energus, okay? Because people got to see, okay, Mark's talking about this stock. Let me check it out myself. And people, gradually got in. The stock gradually moved up in look, we could take a look at the chart real quick and how it was a very nice, easy channel. Now, of course, it's come down since then, right? Since the peak. But this was a nicely defined channel, right? Not some automatic moonshot. It gave people a chance to digest earnings announcements, talk to management. A lot of people fed back to me there. Hey, I talked to management. Here's what they said, blah, blah, blah. And oh, by the way, this company's gone from absolutely unknown back here when we started talking about it to being featured in a fireside chat at Planet Microcap, the preeminent, as of right now, conference. LD Micro was preeminent. Okay, we'll see what happened. It was like the professional wrestling wars between WWE and WCW. That's what's kind of going on at this moment. But Planet Microcap is the preeminent conference for microcaps. They're going to be the fireside chat focus on June 17th. That's next Wednesday, this coming Wednesday at 3:30. I think it's going to be broadcast, so y'all can check that one out. But this is what I like to see. Right? We're not trying to see a stock go straight up and then come straight down and people, what do you call them? Bag holders. I'm not here to create bag holders. I'm here to create winners. I want winner after winner after winner after winner. I don't want 300,000 followers where 200,000 of them aren't following anymore because they were bag holders. No. Okay? I got 10,000 followers and I want it to become 11 and 12, 30 where everybody's engaged. Because if everybody's engaged, someday maybe you will be giving me information that leads to the next pick. If you learn the right way of doing things. All right, so that's my speech for the week as far as that goes. But bottom line, you've got the picky that ends up in the spreadsheet, but then you end up with the growth names, the names that can fill out the rest of your portfolio, right? Some people want to go 100% picky, but I've got names we've talked about many times over the last few years, right? NVIDIA at 40, ARM at 100, Micron at 100. Where's that now? Micron at 100, and now it's 1,000. 10 bagger. We talked about Micron at 100. It's in the lives, right? I can't just make this stuff up. Everything's live. The spreadsheet's live. You see what's right there? Those are people. Those are people in the spreadsheet right now. I can't make this stuff up, right? Everything's documented. And that's what I hate about the 10,000 clowns, because they get away with all kinds of stuff. They give you a false name and then they're anonymous. You don't get their real name. You don't get their real credentials, and you don't get a real-time tracker of their performance. And if you do, it's usually those guys that day trading, right? They come in. Anybody can do this, by the way. What if I come in every week and give you the pick of the week, right? And it spikes up 5%, and then I get out and put in the spreadsheet. I made 5% in one day. I can do that every week. Anybody can do that with a following. That's BS. That's 10,000 clown action. All right? We're here for the real deal. I'm here to teach you what's real, real, real. The stuff that George Soros' funds paid me for, the stuff that Jim Cramer's funds paid me for, yes, that Jim Cramer. And if you ever saw the movie Dumb Money, Stevie Cohen, SAC Capital, his firm was paying me for my information, for my picks, because I was taught the real. All right. So there we go. So we're going to talk about these kinds of names, the picky names. We are going to talk about SpaceX. We are going to talk about any name that you want, any name this week. We're going to celebrate the SpaceX IPO, the biggest IPO ever. We're going to celebrate. Listen, I got problems with Elon Musk's personality, but let's face it, you got to give the man credit. The world's first trillionaire. So we got to just let it all hang out today. All right. So anything you want to ask, it's going to be cool. There's no Coach A-hole. Coach A-hole's on vacation. I was on vacation last week. Coach A-hole's on vacation this week. All right. So I'm going to answer any question that you want, so that you guys can understand exactly what's real out there. To my knowledge, I ain't going to fake anything. If I don't know the answer, I'm going to say, I don't know. So here we go. All right. Jacket off. Sweaters off. Let's get to it. All right, so for starters, I should send out the invitation. Good Lord. See that? I was so excited to come in here. I didn't even send out the invites. So now we got the invites out there. Cool. Those people get to miss the initial speech. We're skipping that. We're going to skip all this week. These are basically, if you check out my Twitter account, right? The first thing that you're going to find there is this recording. Listen to it. It's educational. If you go to this website, you can look at it later, markohmstocks.wordpress.com. The first article you come to, Get Rich on Stocks, it's educational. If you go to YouTube, which you are on right now, How I Make Money on Stocks, it's educational. Those three things are what you want to really focus on. If you're watching this show, you should check out those three things, okay? Because that's what will really help you understand more about how I do what I do and how I've been able to make 40% per year on my invested capital for basically since 1996. This is the 30th year, 30 years, okay? Not quite as good as Druckenmiller, because I lost money 3 years. He lost money in 0. Can't beat that. But anyways, let's get into it. We showed that already. Okay. Macro first, off the bat, where's the stock market going next? I don't know. It depends on what you mean by next, right? Tomorrow? I don't know. Next week? I don't know. Next month? I don't know. But the market should be heading, and here's why, okay? And by the way, what you got on your screen right now is the Fear Greed Index. The veterans know what this is all about, okay? When the market gets up to 75, we almost got there. You want to be super careful, especially if valuations are too high. And valuations are definitely, forget it, not too high, elevated. Let's call it elevated. And you look at this chart of the Russell 2000, going back year after year after year. This is going way back to 2000, right? You can calculate how fast the market should be growing over time, depicted by this yellow line, right? In a perfect world, the market would just follow this yellow line all the way up, or maybe even the red line all the way up. That's full valuation. Red line's full valuation, right? But the market doesn't do that. The market goes up and down and up and down and up and down. So what you want to do is be very, what did Warren Buffett say? Greedy when people are fearful. And of course, people are fearful, right? If the market gets down to this green level, if it ever happens again, back up the truck, mortgage your house, sell your dog, and put the money in the stock market. Because even if right? In this particular case right here, you have to wait. How long was it? It was 9 months, right? If you backed up the truck, sold everything you had and put it all in the stock market, you lost 26%. But at the end of 9 months, you were even. And over the next 12 years, you averaged 13% a year and probably became a millionaire if you started with, let's say, 50,000 bucks, right? Which if you mortgage your house, you could do that. The absolute best time to buy the stocks was here in '02, here in '09, and here in COVID, of course. But the reverse is also true. The worst time to buy stocks in history traditionally have been at this red line level. Boom, 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 right? And you see, this was the stimulus driven bubble. This was a bubble, right? It was the COVID bubble. I call it the COVID bubble. We are now in the AI bubble as the market rips to, let's bring up the cues. All right. I remember this very well. I was there. I was an analyst. I was getting paid by Wall Street for my research, for my information to help guide them through this bubble. And I kept them in there almost until the end. It was beginning of November, right? And it wasn't a guess. It was like, oh, the technicals are topped out, the chart, blah, 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 blah. No, that's not how it's really done. How it's really done is you actually know what's happening in terms of money flowing through the system. People actually buying. In the internet bubble happened because corporations were buying internet technology like there was no tomorrow, because they had to figure out if they were going to get Amazoned, which was what happened to Borders Bookstore. Borders Bookstore got blown out of the water, out of business, bankrupt, see you later, because of Amazon and that e-commerce technology. And everybody had to figure out if they were next. So everybody was buying internet technology to figure out how it could affect them positively or negatively. And it created this big bubble of demand, of revenue that went along with Y2K. We won't get into it. I don't want to bore you guys. We want to get into stocks. We don't get into now. What do you want to do now with today's stocks? But you need to understand this to understand what's going on now and why I am bullish, even though we are at the red line, which means by definition we're in a yellow alert. Yellow alert means caution. But you know, when you're at a traffic light, if the light goes from green to yellow, yellow means proceed with caution. Okay? So we're going to proceed, but with caution. And I'm going to talk about all that on this show. But anyways, bottom line was, as long as the revenue kept ripping, the market kept ripping. That's the bottom line. And in November of 1999, I saw signs that told me that the revenue was going to stop ripping soon. Okay? RFIs, RFPs. If you never heard of it, it's requests for information and requests for proposals. That's what corporations do when they want to buy something. They send a request for information about the products that they're interested in buying. The various competitors, give us your information, give us your information, give us your information, right? And then they figure out who they want to buy from, and then they make a request for a proposal. Send me a contract. We want to know what it's going to cost for us to do X, Y, and Z. Then you have the negotiation, and then you have a signed contract. The company I worked for did all that, helped companies through that process. So we processed billions of dollars worth of transactions. SAP, Oracle, if you ever heard of those companies. Right? So I knew what was going on because I was seeing the RFIs and the RFPs and the negotiations going on. And in November, the RFIs dropped off a cliff. And that told me, oh, wait, corporations are no longer asking for information, which means in a few months, they're not going to be asking for proposals, which means in a few months, they're not going to be going through negotiations. They're not going to be signing contracts anymore. And what happened? November, December, January, February, March. March hit of 2000, and it became apparent to Wall Street from the conversations they were having with their contacts in the field that contracts weren't going to be signed, that revenue was going to stop going to the moon, and so did the stock market, and it tanked. Okay? The same thing's going to happen now. All right? But what's happening now? Is the money not flowing? No. The money is flowing like crazy. I'm spending more and more on AI every single month. I know a lot of people that the same's going on. Now, here's what you're hearing from the 10,000 clowns. There's a lot of people out there talking about this is a bubble. There's a lot of people that companies overspent. They're going to cut back. Well, guess what? That's true. But how many companies, stupid? What percent of the companies, stupid? What percent are they going to cut back, dummy? And what happens when the next new thing, and there's always a new thing with AI, all right? I've been telling you for 3 years, in the face of the naysayers, I'm not alone, of course. I'm not the only person that's been saying AI is not a bubble, but there have been a lot of people calling it a bubble for 3 years. And I knew it wasn't then, and I know it's not now, because it keeps doing more stuff. And as long as AI keeps doing more stuff, there's no way it can really be a bubble. Because even the companies that overspent on AI over the last few months that you've been hearing about out there in the 2000 clown land of Twitter, even those companies are finding new ways. I spoke to somebody today and said, I overspent on AI. We didn't know what we were doing. We let it loose on our employees. They used it crazy. We need to rein it in. But for that particular use that we're doing right now, we need to spend less on what we're doing. But now there's new use. There's AI. There's agentic AI, right? You got some people that are using for coding, making software. There's some people that are using it for agents that do stuff for you. And the agents are kind of new. And so now it's a whole new use case. So even if you were overspending on the software development that AI does for you, now you're going to take some of that money, right, that you're going to cut down on that, and it's going to be applied to agents. And so at the end of this conversation, right, it was, okay, so you way overspent on coding. So what's going to happen next? Oh, we're going to spend more on coding? No, we're going to spend less on coding, but we're going to spend more overall because we got to spend a lot more on agents than we spent on coding. So the money that we save on coding is going to go towards the agents, but then we're going to have to put more money on top of that. And then there's going to be something else and something else and something else, and we'll talk about that in future episodes because I'm looking for who the next winners are going to be down the road. 1, 2, 3 years down the road. Companies that nobody's thinking about yet because people aren't thinking about what's going to be next for AI. At first it was, why is the sky blue? Right? Simple inference. And then it was, you can make pictures and then video. And then you can code software. And now you can have agents. There's going to be something new for probably decades. We're going to have robots, right? SpaceX. It's not going to stop anytime soon, and the value is there. So I see this being the beginning. I think the yellow alert, of course, the yellow alert's going to stay. Anytime the market's above the red line, it's automatically a yellow alert. But I do believe that we are entering a phase now where you see the spending, and this is the one thing you need to look at. The one thing you need to follow is the money. And the money is CapEx. If Google, if Amazon, if Microsoft, if Facebook are spending more and more and more CapEx, look it up if you don't know what that is, on AI. They're raising their budgets. They haven't stopped raising their budgets. In other words, they are thinking to themselves, I need more of this. I need to invest more in this. The return on investment from this is more than I thought. This is better than I thought. I need to put more money into this. To the point where Google, who used to buy back shares, actually sold shares to get more money to put into more AI investment. Follow that money. Keep an eye on that. because that breaks all ties. Forget about what anybody else is saying about anything about this. As long as those big guys keep spending more money, that's your message from them saying this continues to outstrip our expectations. Period. Okay? So, while we continue to see that, there is every chance that this little boop above the red line, which we haven't seen, like you see, it's just this little blip above the red line, it looks like. When we zoom in, it looks worse, right? Oh yeah, we're way above the red line now, right? But that's nothing compared to this. And this is what we could see. We could see one of these, all right, over the next year or two. We could right now be in 1998 on the way to 1999. So stay tuned on that. All right. So that's your guide for that. Getting back to the market. So when you see sentiment get low, those of you who watch the show all the time know that I look for 10. When we get down to 10 on fear greed, never mind 25. 25 is considered extreme fear. You see over here it says extreme fear at 25. I like the low-hanging fruit. At 25, you can certainly, anywhere around 25, if you're hedged, if you sold your stocks up near 75, great job, right? But the low-hanging fruit, above 75, that's where I draw the line. I'm like, all right, anything that I've made a lot of money on, that's run a lot, looks extended on the chart, I'm selling. Because almost every time you get above 75, a correction comes very soon. So I'm going to play that. And every time you get down to 10, here we got down to 6, and it's only momentarily, right? We got that to 10 on March 26th, right? If we go to March 26th on this chart, what you're going to find is that was deadly close. March 26th. This right here. That's March 26th. This is the bottom. You have to wait 2 whole days for the market to bottom. And if you bought on March 26th, when it first hit 10, on the way to 8, on the way to 6, right? You enjoyed a 31% run in 2 months. That's 300% annualized. Okay? So this is how you use this. Anywhere close to 75, start getting careful. Any stocks you're not sure of, take some profits. You probably should anyways if you follow the lessons that I teach about the risk reward lines. For you newbies out there, you're going to see some as the show goes on. But you're going to be lightening up, right? The risk reward lines are telling you to lighten up. The fear greed index is telling you we're getting pretty close to 75. What are we talking about here, right? Yes, there's FOMO. Yes, you're going to be afraid because everything's running up. I'm afraid of missing the next 100 points. So what? Miss the next 100 points. I like playing in between the lines, in the safe zone, right? People that shoot the moon, a lot of times get killed, right? Icarus, too close to the sun. Flip side, once you get down to 25, a lot of stocks look attractive. I'm going to talk about some of them. They're still attractive. There, I found some names over the last couple of weeks while I was on vacation. I put 7 figures to work. All right? We're going to talk about those. Yes, we want to see 10 because 10 is like almost guaranteed you're going to make money. If fear greed gets down to 10, you can buy almost anything and you're going to make money. But once you get down to 25, right, you've got bargains and you should start buying those bargains because we might not get to 10. Might just take off from there. You don't get 10 often. In fact, this is a 1-year chart. You only got 2 chances all year to get down to 10. You only had 1 chance all year where we got above 75. But in between the lines, you got 25, 25. There's the 10. Another, right? Close to 60 something. That's getting kind of lofty. And certainly here, 71. You get a lot more opportunities. And here, what, 26, 29. It's pretty close. It's in the 20s. You should be looking at those charts, those risk reward charts, saying, you know what? We've pulled back to the 50-day moving average, for example. I'll show you some charts later. I'm going to start picking things off. Because even if we go lower, I'll just buy more. But I know at these levels, having come down and people in fear, at some point, people aren't going to be in fear anymore. And we are in a situation where the market should continue going up because interest rates are okay. They've actually leveled off a little bit of late. They're not going completely bonkers. And by the way, if you look at this chart back in 1998, 1999, the same thing was happening. It didn't matter. It wasn't slowing things down. So what if interest rates went up 0.5%? It was 3.5 before, and now it's 4. You think that's going to slow down? Like Elon Musk, who is like the return on his investment on Colossus. Remember, I told you about TSSI when it was $2 on the way to 20 and 30? Because I found out that they were the ones building out Colossus. That same Colossus, that same build out, has provided Elon with a huge ROI. Way more than 4%. More like 44% annualized. So why wouldn't you borrow it 4% to make 40%? It's not exactly how it works, but it's pretty close. All right? So interest rates are cool. GDP is cool. Nobody's predicting a recession. You see the blue chip consensus? Nobody is below zero. Nobody's predicting a recession, right? And in fact, the blue chip consensus is rising. Yes, the Atlanta Fed's coming down, and I respect the Atlanta Fed more than the blue chip consensus. Generally speaking, the Atlanta Fed's more accurate. But so what? They're at 3%, and the blue chip consensus is moving towards 3%. So we have a healthy economy, all right? We have a healthy economy. We have interest rates that aren't crazy. We've got a president who is spending like crazy. Money flowing, that's called liquidity, is one of the two most powerful forces in the stock market, the other being valuation. And I would say liquidity is more powerful than valuation, even though I focus on valuation, right? And we have AI, which is getting companies to spend money. Companies that used to hoard cash are now spending money. Electricity, engineers, plumbers, computers, hard drives, Micron, Dell. It's spending, spending, spending. Spending is good for the economy. So we have the government spending big. We have corporations spending big. You've got individuals like me spending big, right? I'm on my way to spending $1,000 a month on AI and probably keep going. For what the value that I'm getting out of AI, the quality of research that I'm now doing and bringing to you, which you saw in this spreadsheet, no closed picks at a loss in 2 years. That's partly because of AI. Making millions more per year. You don't think I would pay $100,000 a year for my AI? I'm spending $1,000 a month. Maybe I would spend $100,000 a year. Easy. So we're just getting started with that. Okay? So this is what you need to keep in mind, because as long as that spending keeps going, as long as the government keeps spending, the corporations keep spending, the people keep spending more. The baby boomers retiring, going on vacations around the world and within the US. The movie theaters starting to perk up again. There's money flowing. There's a lot of people suffering. Yes, it's a K-shaped economy. There's a lot of people that are suffering out there. But as a whole, the economy is doing great. And by the way, not for nothing, but the Genius Act that brought us the stable coins is only helping matters, because every stable coin bought by somebody around the world who wants to protect their money, right? Instead of putting their Argentine pesos under the mattress, hoping that it holds its value, and only to find out the Argentine peso collapses and now that money is near worthless. The people that put their Argentine pesos into Bitcoin, for example, did great. They held value. It held on to their value. Well, guess what? Stable coins are better at doing that because they don't go on roller coaster rides like Bitcoin has done. And as a matter of fact, you guys, those who watch the show every week know I came on here and I'm not a hater. I'm just a truth teller. I'm here to tell you the truth. And when the Genius Act passed, I came on here and told you this Genius Act is going to kill Bitcoin. It was simple. It was simple. Not for an American. For an American, it wasn't obvious. But I'm over here in Moldova. I'm near Ukraine, sandwiched between Ukraine and Romania. I was in Italy last week and England the week before that. And in these countries, there are people that want to protect their currency against devaluation, and they want to put it somewhere safe. Bitcoin was cool, but stable coins are better, safer, more protected. And every time somebody in one of these countries buys a stable coin, that money goes into a treasury, a U.S. piece of debt that helps keep the U.S. interest rates down. It helps buying of U.S. dollars. It helps keep the dollar value up. So even though we are spending crazy, even though our budget is ridiculous, even though, like, I know I'm one of them, I'm concerned for the long-term health of our economy with all this deficit spending that's going on. But guess what? Right now, this year, probably next year, it doesn't matter because people around the world are buying stable coins, and stable coins buy dollars that buy U.S. treasuries, keeps the dollar propped up, keeps interest rates artificially or not artificially low, which is all good. So everything I just said is good for the economy, even while we have AI providing more and more and more and more. Okay, so the only reason I didn't call the bubble is I just wasn't sure at that point, right? It's just like, but it seems to me now, with everything that we're seeing, with the agentic AI, with the CapEx going up, with the IPOs helping these companies spend even more, there is a really good chance that we keep seeing the market move up, kind of like what we saw in 98 and 99. Doesn't mean you shouldn't be careful. We're in a yellow alert. But there's going to be names that you can buy. We're going to talk about a lot of them. We're going to have Chartorama, right? And participate in this like I did in 98 and 99 when I made 350% on my money in just that 1 year. Okay, let's keep going. We'll play this for a sec.
We're all pretty AI pilled. And if you're AI pilled, that means we got to build a lot more compute than the world thinks, and that these models are going to be a lot more valuable than people think. You combine that with their core business. I don't know another entrepreneur or another business that's a better bet on the future, right, than SpaceX. And so I think for me,
okay, SpaceX. Let's talk about it. By the way, this is a great podcast. The BG Squared podcast, BG2. You can look it up. You can look up Gavin Baker on Twitter. It's on here on screen. I'm not going to play the rest of the video, right? You can go look it up yourself and check it out. It's a great video. It was a great podcast. I think it's an hour and 20 minutes. It was phenomenal. Okay? You get the real. These guys are insiders. They're really, like, they've got billions of dollars on the line. And by the way, you had, I think Bill Gurley was in this particular podcast. Yeah, Bill Gurley is actually one of the hosts of this podcast. He was a customer of mine back in the day. And he was, back then, we're talking 27 years ago. Bill Gurley was already one of the smartest people in technology. Imagine how smart he is now. This is what you get. These are real. These are the real guys out there. These are the real experts. These are people that you can really listen to, not the 10,000 clowns. And they'll tell you about all this. Now, what does that mean for buying SpaceX? Well, here's the thing. From a pure valuation perspective, as of right now, I think SpaceX is overvalued. From a pure valuation perspective, right now. Does that mean that the stock won't be 260? It's 169 right now. Will it not be 269 a year, 2 years, 3 years from now? Possibly. Because this is a growth company, they are going to grow. And I don't care what any of the 10,000 clowns have to say about where they think that revenue is going, because they don't know, and I don't know either. Bill Gurley doesn't know either. Elon Musk doesn't know either. Okay? They have an idea. There's a lot of these guys. In fact, that podcast, those guys own shares of SpaceX from the time that it was private to now. They don't plan on selling. From what I heard in that podcast, they planned on buying in the IPO to keep their percentage of the company up. That's a funny thing. If you own 1% of a company and they go and raise money through a round of funding or an IPO, you get diluted. You go from a 1% holder to something less than a 1% holder, unless you participate. So some of these people, I know one investor in particular, huge, multi-billion-dollar legendary investor, said, I own 1% of this company. I want to continue to own 1% of this company, so I have to buy shares on the IPO. And I don't plan on selling while I'm alive. Why? Excuse me. Because he believes in Elon Musk's ability to deliver on his vision, which is, what's he great at? Spaceships, right? I mean, when you hear, like, I don't hear about NASA anymore. It's SpaceX, right? 20 years ago, they popped onto the scene and they started sending rockets up. And he's going to keep working at making these rockets reusable. And reusably quickly, kind of like a school bus, right? It's going to go on a trip. You're going to gas it up, clean the windshield, and send it on another trip. That's his vision. He's saying he's going to be able to do this in a couple of years. He won't, right? He even said it himself. We always come through, but we're always late. Well, that's part of the shtick with him. Because if you want a great valuation, if you want to be a great CEO, you have to present a great vision. And to some extent, you have to kind of embellish so people really believe. And you can always kind of keep them strung along as long as you keep making progress. And that's what he does. He keeps making progress. Again, I don't really like his style. That's my problem. The fact of the matter is it works. So I do believe he will have a reusable spaceship at some point. And as and when he does, oh, by the way, what's the other thing he does well? XAI, we talked about that already. AI data centers. I'm going to give you another stock in a sec that goes along with that. Colossus 2, that TSSI built in large part for Elon Musk. He's now making tons of money on those 2 data centers, not by being an AI company, but by serving as a landlord to Google and Anthropic. Tens of billions of dollars deals in 1 month. Why? Because he has proven that he can build these things faster and more efficiently than anybody. And do you know who likes that idea? Jensen Huang, NVIDIA CEO. Why? Because the last thing Jensen wants is somebody ordering a bunch of NVIDIA chips and then having them sit on a shelf somewhere while they wait 3 years for the data center to be built. Elon built Colossus 1 in 19 days. So guess what? Jensen is going to give Elon more chips because he knows those chips are going to get used faster, which produces more revenue for Jensen, for NVIDIA. Right? That's a huge strategic advantage because now Elon gets more chips. In fact, from what I heard, he's going to get a full 20%. One company getting 20% of the next generation NVIDIA chips coming up, the Vera Rubins. Okay? And he's going to use his method of building data centers fast, and he's either going to use that data center for his own use, right? SpaceX, XAI, Tesla if he acquires them, whatever, right? Or he's going to be a landlord to somebody else again. Say, oh, you've been trying to build a data center for 3 years. Well, I got extra data centers over here. Come on, step on up. Pay up. Okay, so he's good at that. So what makes you think that if you put that chocolate and peanut butter together, you won't get a Reese's peanut butter cup? that you won't have AI data centers in outer space because he knows how to go to outer space. He knows how to build AI data centers. So just put the two together. It's not easy. It's not as simple as what I just said. Otherwise, he'd already be doing it, right? But it's going to be done. I'm telling you right now, it's going to happen. The progress is undeniable. Okay? And then what? What happens if he's the first person that can establish a military presence on the moon? Well, then he owns the moon. Because who else will be able to establish a military presence? Anybody that tries to go to the moon, he can just shoot them down, say, stay away. This is my place. This is my property. This is my planet. My moon. Because who does the moon belong to? Who does any country belong to? When a country gets invaded and taken over, that doesn't happen anymore these days, but it was happening as late as, what, 50, 60 years ago? It still happens to some extent. Countries get taken over. Pieces of country get taken over. Land, right, only belongs to somebody as long as they can defend it. So what if he goes to the moon and he can defend it? Then he owns the moon. You know what the moon is worth? You know how many metals? The moon used to be a piece of the earth, right? Now, it's not happening tomorrow, and this is the thing. I do not own SpaceX because I don't like the valuation right now, and I like valuation. But if you're a long-term investor, if you're the kind of person that says, I can put this in the closet for the next 10 years, no problem, not worried about it, I'm almost sure you're going to be making money. Will you get rich off of it from this valuation? I don't know. Rich? That's going to be tough. He's going to have to really deliver. But if you have a long-term focus, yes. Now, the one thing I will say is IPOs like this have traditionally, the big hyped IPOs have gone wrong. I also didn't participate in the Meta IPO back when it was Facebook. Okay, intentionally, because I didn't like the valuation. And what happened? There we go. I had it right the first time. Let's zoom in so you can see. It got smoked. Look at that. Okay? It opened hot and just went down, down, down from there. Okay? And not for nothing, I'll show you the Cerebras chart in a second. The same thing happened there. Super hot IPOs get sold off because smart money gets out. Eventually, Meta got down to under 18 bucks. I bought it at 18. People thought these guys were dead because mobile phones were taking over the world. And people thought that, well, geez, everybody uses Facebook on their computer. So Facebook's going to be dead. If everybody's on their mobile phone, then nobody's going to be using Facebook. That was so stupid, right? Like you now know that how stupid that sounds, because the mobile phone made Facebook 10 times more powerful, because we're not all home on our laptop all day, every day, but we do have our mobile phones with us all day, every day. These are common sense things that eludes the geniuses on CNBC. Some of whom thought that Amazon was a bad business because it was losing money. Dude, they were losing money building tanks and missiles and bombs to take over the world. And they took over the world. Now they're not losing money anymore. Right? Same as the people that said AI is a bubble. And I could very clearly tell you why it wasn't. This is the difference between the 10,000 clowns and people who actually work in the industry. So anyways, let's get back on point. Bottom line, I like TSSI right now because what seems to have been lost in the sauce of the SpaceX IPO, like we talked about OPTX, right? Gave you OPTX in the mid-single digits. Look at it. This thing got up to what? 15. Went from about, I think, 6, 5, whatever, 5 to 15. That's a triple, right? I talked about OPTX. I said it belongs closer to 12 than 6. I've said that multiple times. I still say that. It belongs closer to 12 than 6. Well, now it's, once it got to 12, what are we talking about? right? Now it's above 12. It's above my lines. So I don't own OPTX anymore. And by the way, I'm sure there's a question in the chat. You can put your questions, by the way. Be kind. Put question marks, by the way. Put 3 question marks in front of your question. That way I can see it. I like all the comments. Give me the comments. Give me a thumbs up if you like that a multi-decade, multi-million dude comes here for free 2 hours a week just to pay it forward. I get nothing else out of this. No subscriptions. No, you guys know the spiel. This is just for you. All right. So give me that thumbs up. That's the least you can do. You don't have to hit the subscribe button, the notification bell. That's for you. But the algorithm likes the thumbs ups. The algorithm likes comments. So give me comments and give me the likes. Anyway, to keep going. So we had OPTX, right? It's overvalued now to me. There's a question that we got in the chat that maybe shows up in this chat, but in one of the other chat rooms, asking about, there was a company, I forget which one it was, I'll see if I can look it up right now, that had the rights to buy a bunch of shares of SpaceX or something. I don't know the exact details, but I know the answer, okay? If you look at a company that has a bunch of shares of a company about to go public, that stock will rip. And see, what's going on right now with OPTX is something that you will see happen over and over and over again. So know this now, because we're going to have Anthropic and Open AI will come public probably this year. And you're going to have a similar dynamic, right? Leading up to the IPOs, right? Leading up to the SpaceX IPO, people said, I don't own SpaceX, but I want a piece of, the action. A good place to get a piece of the action was OPTX because of what they do. We're not going to talk about it again just to save time, because it's already close to 3 o'clock. It's going way over in terms of our normal scheduling, right? But suffice it to say, OPTX was a great play on SpaceX. Well, guess what? Now people can buy SpaceX. So why isn't OPTX up? What is it? It doesn't say here correctly. It's up like 20% today, SpaceX, right? Why isn't OPTX also up 20%? Because people don't need to own OPTX anymore. A lot of people owned OPTX because they couldn't own SpaceX. It was their way of owning SpaceX until SpaceX comes public. So the play here over and over and over again is to sell the names like these the day before the catalyst hits, the day before the IPO. And if you did that, right down to the last drop, right? If you sold OPTX right at the close, right, 14, 15, you almost top ticked it. Now it's coming down. Will it keep coming down? I don't know. But generally speaking, these events cause these names to come down. Now, what about the names that actually own shares of SpaceX or own shares of OpenAI? Here's one thing to remember, okay? If a company owns, let's say, $10 billion worth of SpaceX as part of their business, if Dell owned $10 billion of SpaceX, Wall Street will not give them credit for $10 billion in the same way that they would give them credit for $10 billion if it's cash on their balance sheet, because it's not cash on their balance sheet. It's in stock that can go up or down. It's in stock that the shareholder may or may not care about. Everybody cares about cash because cash is cash. But if I buy Dell and I'm getting some SpaceX with Dell, and I don't care about SpaceX, then I'm really not happy about that. Personally, what I would want is for Dell to sell that SpaceX stock and just have cash on the balance sheet, right? Because I don't want to own SpaceX. I'm talking about this as an example. I'm not saying me, right? So what ends up happening is those stakes end up being discounted. Historically, my experience, 40%. Usually a 40% discount on those assets. Unless there is a clear path to liquidation. The company says, hey, we're about to sell our $10 billion of SpaceX. all of a sudden, watch how fast the stock shoots up, because that discount will disappear, knowing that the stock is going to become cash. All right. So that answers that question. That was a great question. So I took it out of the queue. All right, let's keep going. We got a lot of stocks and a lot of charts to go through. By the way, this is the website for the BG2 podcast. There's Bill Gurley, old customer of mine. And Brad Gerstner, I've known about him. He was never a customer of mine, though. He worked for a customer of mine. And there's this one right here. I would listen to this, the SpaceX IPO episode, the latest episode. All right, so that takes care of that. That takes care of that. I've already talked about this, so you can go to X and read it yourself. Okay, it'll give you a good overview of my thoughts on this situation right now. Right, so we can get rid of that. This was I put this on X when? June 6th. Okay, so 6 days ago, June 6th, you can look it up and you'll see. Right, it takes you 2 minutes to read and save you the trouble of listening to me blab for 2 more minutes without getting to stocks. All right, let's keep going. We're going to buzz right through this. China spending more money on AI. Spending. It's not a bubble yet. Right? Some stocks are. We're going to see some bubble stocks. But here's another podcast you should listen to. Let's play this real quick.
Elon's pivot to cloud kingmaker is succeeding. Boring Business wrote, "This is absolutely insane. Elon Musk's xAI reportedly spent $40 billion to build their data centers. Based on public disclosure of the Anthropic and Google deal, xAI will get paid $26 billion per year to license the compute from these data centers. That's a payback period of 18 months for all the data center spend from just 2 customers.
Crazy.
And you still think AI infrastructure capex is a bubble? Elon's pivot to cloud kingmaker is succeeding. Boring Business wrote, "This is absolutely insane. Elon Musk's xAI reportedly spent $40 billion to build their data centers. Based on public disclosure of the Anthropic and Google deal, xAI will get paid $26 billion per year to license the compute from these data centers."
$40 billion to make this stuff, and he's going to get $26 billion per year back for it. Bro, if you ever bought a house for, can't say $40,000, let's say $400,000, and you got $260,000 of rent back, that's basically what Elon did in this case. It's the equivalent of that. It doesn't happen. That's an insane return on investment. And it's an insane incentive to get as much money as you can and build as many more data centers as possible, because it's ridiculously profitable. And so he's going to keep doing it until it's not ridiculously profitable. Google and Anthropic needed data center capacity so badly that they were willing to pay $26 billion per year for something that cost him a one-time fee of $40 billion to create. All right? AI Daily Briefing is great podcast. It's not an advertisement. It's me telling you this is a great podcast. They don't know who I am. Party like it's 1998. The macro analyst. Let's see if this is even worth. This is worth checking out. It's 39 seconds.
Let's dive right in. Today's key macro question is: should investors chase the pending wave of trillion-dollar IPOs? The short answer is historical data of mega cap tech IPOs suggests long-term investors who have emotional fortitude and/or low liquidity preference required to ride out significant drawdowns can do well with the set it and forget it approach. History suggests, however, that risk-aware investors.
He's saying the same thing I told you before with the Facebook example. Okay? In the short term, there is a very good chance that you're going to get an opportunity to buy this stock at a lower price. I can't guarantee it. Right? Maybe you want to hedge your bets. If you feel like I want to own SpaceX for the next 10 years, maybe you buy half now and wait and see if it crashes like Facebook did, and then buy your other half. By the way, I promised that I'd show the Cerberus chart. Okay? And trust me, I wanted to buy Cerberus, but I just couldn't do it. The valuation just wasn't like, I'm picky. I'm disciplined. And everybody that bought this stock on the first day on the IPO is underwater. This was 375, now it's 214. You know what this is? This is losing 45% of your money in 1 month. And this is a great company. I love what these guys do. This is crazy. They make a chip that's an entire wafer, right? Nobody does this. And they pack it with SRAM, okay? And that's not DRAM. DRAM is in short supply. So now these guys have been able to pack a different kind of memory on this giant chip, okay? It's got different use cases, pros and cons to NVIDIA, because it's a completely different thing, but it's going to get a lot of play. I would love to own this stock, but I want to own it at a better price, right? And now we got a better price. So maybe now, and as you see the stock kind of rounding out and it's down 45%, it's below, I think it's right around the IPO price, okay? Cool. Maybe I start picking at it, right? Buying a few shares here and there, start stocking up. And if it goes lower, then I can buy more. And if it gets ridiculous, then I can back up the truck, right? But see, this is, right? I think you get the point. So that takes care of that. We're going to talk about these companies later in the show. All right. GeoDrill, Gatekeeper, and Radcom. But let's talk about more important things first. Those part of the picky crowd, by the way, those stocks. Some data points. Last Friday, right? I sent out a tweet, and I've been talking about, like, you know, where the market was at the moment. I mean, we had stocks that I love. I love Twilio. Okay, I own Twilio. I didn't sell out of Twilio before the decline in share price that we just recently saw, but I did sell some, okay, because of these runs. What do I tell you? On these spikes, on these big moves, when you look at you can just look at the chart and draw these little lines, right? Like you can see what was the last high. You can connect the dots on the highs, you can connect the dots on the lows. If you make two parallel lines on a logarithmic chart, go back and listen to this later and ask AI what this all means. But two parallel lines on a logarithmic chart. If you could, I could draw boom, multiple lows. That's a nice line. Make a parallel line. Boom. There's a technical chart. Okay? And I saw Twilio. I told y'all about Twilio. I told y'all about Twilio down here. Right? $100 went to $200, and more importantly, it got extended. Look at that sharp move straight up. If an airplane, remember old propeller planes? If those planes tried to go straight up, you know what happened? They would stall out. The engine would stop and it could crash. And that's what happens to stocks when they get overextended. Like when a stock is at 187 one day and a few days later it's 238, there's going to be a lot less people that want to buy it. They're going to say, damn, that was 187 just a few days ago. Now it's 238. Nah, I'm not jumping on that. And at the same time, people that were already in it said, damn, my stock just went from 187 to 238. I'm going to take some profits. And that's what happens. It's supply and demand. That's called liquidity. The supply and demand balance shifts, and the supply comes out. The demand goes down. The stock goes with it. Okay? Valuation takes a back seat to that. Over time, valuation is a gravitational pull on the stock because it attracts people. If this stock is only worth 100, anybody that's smart is going to be selling at 200. If this stock drops to 50, anybody who's smart is going to buy it because they think it's worth 100. There's going to be a gravitational pull towards 100, the actual value of the company. But not many people are trained to know the value of a company. I am. I'm among them. Okay, so I build these charts for you guys as a guide to understand how I perceive the value of a company in the event that it's operating on all cylinders or none. I can't tell you, I'm not going to get into the details of how many cylinders. You guys have to decide. I'm going to give you the research, but I don't want to give you picks. I don't want to give you, like, there's people get in trouble for that kind of stuff, and I want to help you, but I don't want to do it at my risk. So, and not for nothing, y'all, we are making lots of money, so it works. But you see here, company that I love their positioning in AI. They are like the super highway for a lot of AI activity. It got up to a certain level. I said, I need to take profits, right? Now, check this out. We're going to go to the daily chart where you got the 50 and 200-day moving averages. There's your 50-day moving average. There's your 200-day moving average. And as the stock gets closer to its 50-day moving average, I want to buy my shares back because this is where oftentimes it will see support, right? If it breaks that support, it could drop down to the 200-day moving average, and then that becomes some kind of support. And also you see here where right around, what is it? $150 a share at 150, at 150, at 150. It kept stalling out. It couldn't break through 150, and then it did. Once you break through 150, then that psychological barrier has now flipped. It goes from all the people that regretted not selling at 150, and the next time it gets close to 150, 150, 150, they sell, they sell, they sell, and the stock goes down, down, down. Once it breaks through 150, that psychological barrier flips to where people regret not buying it at 150. So if it gets back down to 150, which by the way, if it does, right, it will probably collide with the 200-day moving average. So people who care about the 200-day moving average will want to be buying at that level. People who care about the 150 level will be buying at that level. So there's going to be that demand that increases from there. Now, will there be an equal amount of supply or more supply to drive it even further down? Maybe, but this is why it's important to know the company that you're dealing with and their positioning in the marketplace. And I like this company. So as it's gotten down closer to the 50-day moving average, I've picked some shares up. I don't have a huge position here, small position, right? If it gets all the way down to the 50, I'm going to boost it up. If it gets down to here, that's when I'll get that kind of position that I had back when it was under $100 a share. All right. So there's your little lesson on how to do that. But it all starts by understanding what the company is actually worth. All right. And I feel like this company has every ability. I'm not making a call. This is not a price target, but I think they have the ability, the potential, right, to get up to 350. If all goes well, right, in due time, not tomorrow, but I think it can get to 350, right? If they execute. So there's a lot of ifs in there, but I feel like they can with reasonable probability, not surety. And that's what guides me. It's like, how probable do I feel it is? How strong do I think their competitive positioning is? How much do I like this stock? Right? This is where some feeling can come in, because as long as you have a really good idea of what its potential value is for real, not based on some chart. This is not what I said. It's not just based on this chart. You can see this chart does not, some people would have it like this, right? Why wouldn't you have it like that? I have it down here because that's what the math tells me. That's what my training, 10 years of 16 hours a day training tell me this is where this line belongs. Okay? And not for nothing, but during the COVID bubble, it got way above this line. So the potential exists for it to do that again. Maybe it can go to 600. I won't be there because at 350, that's where I draw the line. If it goes into a bubble, fine. Good luck to those who want to buy it at a bubble. I'll miss out, but who cares? If I buy it at 175 and it goes to 350, I doubled my money. That's good. That's Gucci. I'm making millions per year. My way works. I've seen plenty of people who were worth more than me who became worth less than me because they were too aggressive. Right? So if you want to learn my way, that's my way. All right, we got a lot of stocks to talk about, so let's keep going. We're not going to talk about that yet. The tweet, we talked about that. Oh, Friday. Here's something you really need to know about this market. Here's something you really need to know about this market. It is a rotating market. Okay? Right now, the software companies are getting smashed. Look at CRM, ServiceNow, a lot of these stocks getting smashed. Gold getting smashed. Bitcoin getting smashed, right? But at the same time, there's a lot of stocks that have been ripping. OPTX, perfect example, right? This is money rolling from one place to another, one place to another, one place to another. Everybody's looking for the next thing that's going to rip, and when it rips, they take their money and they go try to find the next thing that's going to rip. That's what I do, okay? I don't try to pump it and dump it, but which you can't do with a lot of these. I mean, I gave you ARM at 100. This is a multi-billion-dollar company. I wasn't telling you about ARM that I like ARM to pump it. I was telling you about ARM because I like it. I'm here to help you make money, right? And when the stock got up to the resistance level, being dumb, I sold out. I should have kept half my position. I made 70% in a couple of weeks, but I knew that it had the potential to get up here. And for some reason, I can't even remember why. It might have been just having a rushed day. I sold out at 170 and the thing doubled right under my nose. I made 70% instead of almost 300%. Right? But this is what being disciplined is all about. Right? Maybe if I didn't do this show, I'd have an extra 2 hours a week to make better decisions. Who knows? So anyhow, what else we got to talk about? Oh, rotation market. So keep an eye on this because there's a lot of areas that money is going to rotate in and out of. What I noticed, look at this. That's the regional bank ETF. So while the market's been tanking the last couple of weeks, the regional banks have been going up. That's money rotating. Money does not want to leave this market. It's just rotating. So keep that in mind because you can use that to your advantage. By the way, I'm not the only one that thinks this market can keep going. Ed Yardeni who's actually kind of a legend on Wall Street, that's his target out in the future. Okay. Let me pull this back. There we go. Okay. This is where he sees the market going over the next few years. That's his target in the next few years. And this is where we are. That's not crazy. It's 9% per year. Oh, boring. But guess what? If the market just stays within this cone right here, right? Stays above the red line, below this white line, we are going to make so much money. Because in an environment like this, I can easily make 40% a year. It's easy. You just find the names that people haven't discovered yet. We're going to talk about some of those names very shortly. And hopefully have time. I'll make time for Q&A. We're going to go over today. I already see it. I missed last week. What are you going to do? All right, so let's keep going. By the way, in addition to everything I said about stable coins and the Trump economy and AI and CapEx and all that stuff, Wall Street is going to push this to the very last drop. Wall Street will push a stock market until it breaks on its own. Wall Street will say buy, buy, buy until it's buy, buy, buy. Until it's buy, buy. Until the market actually breaks down and everybody knows that it's destroyed. Once everybody knows the party's over, that's when Wall Street's going, oh, we're going to downgrade the stock to a hold. It's always late. You guys know it. If you've been watching long enough, you know that Wall Street's always late to getting out of the party. There's a reason for that. They make money by selling stocks, brokerage fees. Making money, fees. Go watch The Big Short and see how greedy. These are businesses, and they'll do anything within the law to make money on you. Okay? CNBC, making money on you. They don't care about you. They care about making money. It's a business. It's a business. It's not your mom. It's a business. They want to make money on you. The colleges want to make money on you. Wall Street makes money on you. And where are there more billionaires than Wall Street? They're the best at making money on you. So, but you can use that to your advantage, right? That's how you know that this will keep going unless something happens to break it. So let's see. So what do you do in a bubble? What do you do when valuations get crazy? Well, don't chase, right? You don't want to chase. You want to take advantage of, look at that, right? I bought Akamai yesterday. I like Akamai for the similar reasons as I like Twilio. Infrastructure. They're not the best, but they are infrastructure. They've been around for a long time. I used to go to this company all the time to do reads for my Wall Street customers. right? To tell them how things were going. I'd go visit the company and I wouldn't be talking to the CEO. Okay. I was trying to find other things out, sneaky stuff, legal, but sneaky, right? Great company, well positioned for AI because of the network that they have, the infrastructure that they have. But guess what? It got too pricey. It just ripped straight up. Look at that, right? 87% in 1 month. It had to take a breather, right? Down to the 50-day moving average. Boom, I'm back in. Not in full, right? If it pulls back to the 200-day moving average, that's when I'll go more. But I think I more than doubled my position yesterday. And now my position had come way down because, hey, I made 86%. I'm going to take a lot of money off the table, right? And then that money that I leave on the table went down 20%. So let's say I put $500,000 in the stock and it doubles to $1 million. And I take my original $500,000 off the table, put that in my pocket. And the other $500,000 drops 20%. I just lost $100,000, but I'm still up $400,000 because I got $500,000 in my pocket. Now I only have $400,000 of the stock. My original position was $500,000. So to get back to my original position size, where I started, right? I got to put $100,000 back into the stock, which I can do easily because I still have $400,000 of profit. Then I do that, and I still have $300,000 of profit, but I now have the whole full position that I started with, and $300,000 on the side at a very much more attractive valuation. Okay, we're gonna show you more charts like this. I'm not gonna explain each of them like this, but I do like Akamai. I'm not gonna tell you to buy the stock. I'm gonna tell you what I'm doing. And I can reverse that at any time. You go read those disclaimers, disclosures. I'm just here to talk. So let's see. Focus on obvious bargains, right? Don't chase these moves. Don't chase moves like this. This is how you lose money. You want to wait for a pullback if you love the name, or better yet, find them before everybody else does, right? I was talking about these names, ARM, when nobody wanted it. Look at it. Nobody wanted ARM here. I was talking about ARM at 100. There's proof, right? Old episodes of this broadcast. And then everybody wanted it. I told you about Micron at 100. That wasn't as low. I mean, you could have 60, right? Would have been better, but it was 100. And I got at it like 200. And it kept going. That's so what? Right? But you don't want to be chasing these crazy moves. NVIDIA, I wasn't super early to that, really. I brag about telling you about NVIDIA at 40. So what? 40 was only here. Here. Right? Some people bought in at 10, 20, 30. It wasn't until 40. I was late. Right? But you see this right here? This consolidation, right? Didn't chase it up. Got it right about here. Right about here. Right? That looked nice because it had spent 5 months going nowhere and then dipped down. And I knew AI wasn't a bubble. I was telling you AI wasn't a bubble. And boom. Finally, people realized, hey, wait a minute, the stock should keep going up. I didn't want to chase it back here, but it's been 5 months going nowhere. Maybe it's time to go somewhere again. And it did. Okay? So there's your little, you don't need all of the bells and whistles of technical analysis. I'm not an expert on technical analysis. This is just common sense. It's very easy. All right. So, let's show you something. This is something you need to be prepared for if you're going to play the bubble. All right? And then we're going to go to Chartorama, and we're going to go to Q&A. This is 1998, 1999. Okay? This was amazing. 1999, from right here in 98 to right here at the beginning of 2000, the stock market went up. The Qs. Okay? You got 18 months. This is 18 months, 1.5 years, 18 months, 350% just by buying the Qs. Okay? You made 4 times your money More than 4 times your money from here to here. Basically 25 to 125, almost 5 times your money in 1.5 years, doing nothing, right? But here's the thing that you need to know about this. Every single month in 1999, I checked, every single month, there was a drawdown of at least 6.5% from the high of the previous month. Every single month, at least 6.5% down. Look at this. You see this right here? It doesn't look like much. But you know what this is? From here to here? That is 14% down. Okay? It was a lot of volatility. So if you're going to play this, right, don't play with all your money. That's just my advice. You can go ahead and do it. But just know, when the fat lady sings, you're not going to know it. Because when you get one of these pullbacks, right, there's a 15% pullback. You're going to be like, 15% pullback. All right, I'm going to put my profits back into the stock market. And then you get another 15% pullback. You're going to not know what to do. You're going to be thinking to yourself, I believe in this. I'm going to take out a loan and put even more money in. But what if it goes down another 15% from there? Then you're really screwed. Okay? Because then you get margin calls. You can go broke. I saw people go broke back then. People I know. People that I haven't even spoken to since because they went into a shell. Not because I blew them off. I reached out to these people. They were just so psychologically destroyed from what they did to themselves. I knew a guy, he went from 10,000, he was following my picks back then. I was sending them via email, right? Just, this is a stock I like. Here's a stock I like. Here's a stock I like. He started with 10 racks. He built it up to 50 racks in just a few months. And then the last pick I gave, he put the whole thing on that one pick, and this pick 10x'd. He had $500,000 from 10,000. He goes on vacation. The first day he's on vacation, I sent out an email saying, I'm selling out of this. It just 10x'd. Okay? He gets back from vacation. It's down 30%. Not because of me. Just because that's what was happening in the market. The market was, the bubble had burst in the stock market. And he calls me up. He's like, what do I do? I was like, you go back in time and sell it at 50, not 35 where it is now. I don't know, man. Well, and I don't know what to tell you. And he said, I'm just going to wait till it gets back to 50. I said, I don't know if it's going to get back to 50. He goes, I'm just going to wait till it gets back to 50. Well, it drops to 25. And then he said, I'm just going to wait till it gets back to 35. And it dropped to 15. And it dropped to 10, to 5, to 3, 2, 1. And he ended up with less money than he started with. $500,000 gone, evaporated. This is, don't say that you won't do this unless you've been through this before, because a human being doesn't know how he or she will react in a situation unless and until he or she has gone through that situation. And even if you've gone through that situation before, if you didn't do it right the last time, you cannot trust yourself to do it right the next time. We're not built like that. Okay, so be careful until you've proven to yourself that you can do it right. Don't say that you will. People don't change. New Year's resolutions get broken year after year after year. All right, let's get to more fun stuff. All right, we talked about the 10,000 clowns. Oh, something that you missed while I was away. Speaking about the 10,000 clowns. Look at that. Talk about a pullback. Talk about not chasing a sharp spike. Finally, CXDO, one of my favorite names. Okay, it's been a good performer. You see this line right here. What has it been growing at? This line's been growing at 44% annualized. So if you bought this stock in the middle of the range and held it until the middle of the range over here, you made 44% annualized. If you bought it at the low and sold it at the low, you made 44% annualized. If you bought at the high and sell at the high, you made 44% annualized. Heaven forbid you bought at the low and sell at the high, you made 157% annualized. Stock's been great. And I think it will continue to be great. And guess what? It's now at the low end of the range. Again. Why? You ready for this? Okay. There's actually one thing that's, all right, I get it, sort of, but it shouldn't crash the stock. One of the founders owns a ton of stock, super big shareholder, right? Has had it in his mind for a long, long time. If this stock ever gets to 10, I'm going to take some profits. Does that sound unreasonable to you? Of course not. I would do it too. I definitely would have done it. It wouldn't mean that I don't like the stock anymore. It just meant it's time to take some profits. Well, so he took some profits. And of course, being an insider, there's a filing, and now everybody knows insiders are selling. Doesn't mean he doesn't like the stock. He just owns too much of it. The dude owns I'm not going to use the word, I'm going to say a ton, right? Of the stock, and his net worth just increased 70% in 1 month. You're going to blame the guy for taking some profits? Well, evidently, a lot of people did. But in addition to that, there was a huge influencer, one of the 10,000 clowns. All you need is a ton of followers, and people will do whatever you say, because that's what people do. Crash the stock. Now, unlike most people, I do the reasonable thing. I called the company and asked for an update. What's going on? How things going? Is there any reason for this? What has Wall Street been asking you? What has Wall Street been saying when they call you? Nothing. Nothing's wrong. Mark, everything's the same as it's always been. Things are going well. The acquisition's going well. Nothing's changed since the last earnings call. I don't know what to tell you. And I said, I know what to tell you. I'm telling you I'm buying the stock. Thanks for the phone call. And I backed up the truck. I increased my exposure to the stock tremendously. Okay? Because it's given me the opportunity that I didn't think it was going to give me again, which was to, once it busted above this resistance line, this line was resistance since the beginning of 2024. This stock has spent 2.5 years in a pennant formation. You see this wedge? You see this right here? Let me get rid of this line for a second. You see that? You see that wedge? It looks like a pennant. You know, when people win in baseball, they get a pennant. This is a pennant. Every time the stock got to 750, basically, people sold. And when this first time that happened, people regretted not selling. So the next time it got to 750, just like I told you earlier, they said, damn, I got another chance to sell at 750, I'm going to sell. And again and again and again. And eventually what happened was the stock's value far outstripped 750, and it was just too much. And there were enough people that came in to buy the stock that it busted above 750. And now the people who sold at 750 or didn't buy at 750 are regretting that. And so they get another chance to buy at 750, like me, right? Except it wasn't from regret. It was because I took profits up at the high level where you're supposed to. And I got a chance to buy back almost instantaneously at a much lower level. What's crazy is, I don't know if this is still the case. I was on vacation when this was all going down. But there are options. For those of you who play options, I like selling options, okay? And I'll tell you in a sec if it comes up quickly enough. But the October 5 puts, you can write this down and ask AI later what this means, right? If you don't understand. But for those who learn the lessons, follow my advice, and look these things up on YouTube, you will understand the October 5 puts were selling for 65 cents, which meant that the worst thing that could happen to me is I would end up buying the stock for $4.35. What? If it drops to $4.35, I am backing up the truck like there's no tomorrow. So yes, I'm going to sell the 5 puts for 65 cents. Because if the stock is above 5 in October, I will make 100% profit on selling those puts. And if it's below 5, I'm buying the stock at a bargain price. Guess what? I can't lose. I like this one and I like this one. Right? The only thing that can go wrong for me is if the company doesn't continue to execute as it has, and I believe it will because they have AI products. They are software-enabled infrastructure, not a software company, software-enabled infrastructure. Remember I taught you about that in a previous episode? Akamai, software-enabled infrastructure. Twilio, software-enabled infrastructure. Crescendo, software-enabled infrastructure. And they're layering on AI products on top of that. I'm not going to repeat it again because I've talked about this on prior shows. We don't have enough time this week. We'll talk about it in the future. But I'm telling you, I backed up the truck on some of this stuff. Those October 5s, I think I wrote 500 of those contracts, that alone, in addition to other things that I did, with the stock and all that. Okay. So these are opportunities that you can take. Will it pan out for me? I don't know. Right. But these are the shots on goal that I take to make my money per year. Right. So there's that. Oh, TSSI. I didn't finish on that, did I? I don't even understand why this is not considered a SpaceX play right now. Look, I've got a problem with the valuation. We've talked about that before. I talk about TSSI a lot. I called it a buy at 2. I called it a sell at 20. Right? And these have been my lines, the red and green lines. If you don't know what that is, watch a prior episode or the next episode. We'll go over it again. We just don't have enough time this week. The veterans know what it is, right? We talk about this all the time. The difference between the white lines, the red green lines, and the gray lines. You got gray lines here, technical. The red green lines are fundamental. The white lines are pending fundamental. If you know what that is, you know what that is. If you know, you know. If you don't, find out or tune in next week. Bottom line, though, the stock's been great. If you've been following these lines, you've been doing great. All right. And yeah, we're not on the lower end of the range right now. But here's the thing that's happening right now. Okay. I don't love the valuation per se. Since back here, I came out and said what I said about Dell. I was the first person to get this full story about Dell in Franklin, Massachusetts, where I used to live, and how that relates to TSSI. And that is proven to be true. I pissed off management. I apologize for that. The way that I presented my research, I stand by my research. It's the facts. Sorry. Don't get mad at me for the facts. You can get mad at me for how I presented it. Cool. Right? But I also called it a great trade back here because I thought they were going to report a great quarter because I had a bunch of great reads on that quarter, and it worked out. What I'm going to tell you now is I'm gaining an increasing number of great reads on their quarter and maybe the following quarter. And here's why. Number one, I already talked about it. Anthropic paying XAI a ton of money for access to Colossus, one of the AI data centers that TSSI helped to build. Google doing business now with XAI. That may also involve TSSI. The proclamation that Anthropic, that Colossus, that data center is going to get a bigger build out throughout June, right? That was the quote. Throughout June, they were going to be building out Colossus, more capacity to help Anthropic's needs, right? If you subscribe to Claude, if you use Claude Code, Anthropic needs data center capacity for what you are asking them to do for you. Every time you ask Claude a question, data center capacity gets used. And as that demand grows, they need more data center capacity. So they asked XAI, Elon, help us out. He said, sure, I'll rent out Colossus for you. And they'll say, can you make it bigger? And they're going to make it bigger. Well, who do you think's going to do that? I think it's TSSI. Not guaranteed, right? But that was the first good data point. And by the way, everything I said about XAI and how they are just a remarkable landlord, they can make data center after data center after data center, and that means that Jensen Huang is going to give them all those chips knowing that they're going to use them. Part of the reason that happens is because of TSSI. And then there's this. One of my contacts visited the company, just like he did a couple quarters ago when we made that great call on the quarter. Sunday night, sends me pictures, parking lot's got cars all over the place. I'm not going to say it was 100% full. It wasn't 100% full, but 80% full. I'll get the exact numbers for you once we parse it all out. I've been traveling and all that. But when a company has a ton of cars in their parking lot on a Sunday night, that generally means they're doing work. Okay? So I think this is a good bet right now. In a bubble, this is what I tell you, valuation, right? You don't want to chase, but you don't want to worry so much about valuation. Because you see what's happened to a lot of the stocks that I've talked to you about over the last several months, right? Kraken, busted right through my red line. ARM, busted right through support. Micron, busted right through my red line. The thing is, in a situation like this, where AI is proving to be so explosive, the fundamentals might warrant a much higher valuation than I expect. I'm not perfect. That's one. And two, investors might not care. They might just buy. That's how a bubble forms in a stock. I can't tell you if Micron's in a bubble or not, because it's impossible to know if and when the demand for their products is going to reach a point where the stock deserves to go down. It's just too hot right now. The fundamentals are too hot. And so now the stock is hot. Is the stock too hot? I have no way of knowing. So I'm not playing with it. To me, it's gambling. If it was at a lower level, I'd feel more comfortable. You look at it, AEHR, okay, right? Not so crazy above the red line, right? And when it got down to here, I was like, okay, I sold out at 70, but when I sold out at 70, it was like 74, I think, with the options that I played. It was right about here. What was that? April 9th. Hey, April 9th was a whole 2 months ago. We've seen a lot of movement in AI. It's become a lot more apparent, even more apparent, that AI is going bonkers. Demand is going bonkers, right? And so the stock has kept going up. And so I had a chance to get back in here in the low 80s. I sold some puts that got me down into the 70s in terms of cost, right? And now I'm back exposed to AHR, closer to the red line level. That's full valuation. That's, right? Operating on all cylinders valuation. And so what it is like, as long as they keep operating on all cylinders, the stock should stay around the red line. But if they go bubblicious, if my math was wrong, and it very well could be because demand is that hot, then the stock should go higher than the red line. So all I need is for them to at least do what I think they can do, and I'll make extra money. And so far, that's working out. Ooh, up 9% today. I didn't even realize, right? That's how you do it if you're playing the bubble. Okay. Good. We are now, I'm going to tell you about 3 stocks. We'll do them in reverse order. Geodrill announced a buyback. Shocking. Everything I've been telling you, I'm not going to repeat it. I'll show you the chart, but I'm not going to repeat everything I've been telling you for months about the valuation of this company. Okay? That doesn't guarantee anything, but the fact of the matter is they finally got back to the point where they say, this enough's enough. We're announcing a buyback. They usually like to buy more drills with their money. And it just got to the point where the CEO said, enough's enough. I'm announcing a buyback. Okay? This is real. Okay? This isn't some BS buyback just to make investors hot on the stock. Nobody knows this company. And the CEO owns like 38% of the stock in the company. He is in it for the long haul. Right? So that's a great sign for these guys. I bought more shares of this one, and I'll continue to buy more. I'm waiting for investors to feel good about this thing. If we see this downtrend break to the upside, the first dip after it breaks to the upside, you get a break to the upside like that, and then you see a dip after the break, that's where I would really get aggressive on this name, because anything up to $4 I think is great for what these guys, the position these guys are in. So that takes care of that. You can go to my past episodes to hear more about that company for the sake of time. Gatekeeper, upsized. $2 million, $2.8 million transit project in Oregon. Whoop-de-doo, right? It's just one state. It's just $3 million. But hey, $3 million is like 1/10 of their whole year, by the way. Okay. And what I'm going to tell you about Gatekeeper is I've done some extra research. I don't have time to go through it all now, but we'll talk about it. I'll leave the slide up here for next week. They've got a backlog of announced deals. I found a bunch more deals that they haven't announced out there. Okay. And last year around this time is when they went on that run, right? Where they got deal after deal after deal. It was announcement after announcement. Like it felt like every week they were announcing another win. As it turns out, there's seasonality in their business, especially with school buses, right? Because it's like you get the summer vacation, they place orders for the school buses for the following year. They do the upgrades. You can't do upgrades on school buses during the school year because you're picking up kids every day. So they do a lot of that stuff during the off season. They sign contracts during the off season, all that stuff. So the thought process is, we'll talk more about it next week, but it may well be finally that GKRPF, Gatekeeper, can finally break out of this downtrend that it's been in, right? And my personal current DCF valuation, I don't know what that's all about, is right here. That means current value, right? Going to, if they execute on all cylinders, towards this higher value out here in the future. I don't know what that circle was doing, what it was doing over there, because I could swear that I had that circle on the $4 mark right there. Okay? And here we are at 87 cents. Okay? So that's nice. See, this is the thing that happens in pullbacks. You get these opportunities. You're looking for opportunities, right? You don't have to chase a stock that's, right? Let's see. Let's check in on SpaceX, by the way, speaking of. Look at that. You see what I told you? I did not know this was happening. I just suspected that it might. Okay? As of right now, anybody that didn't buy the stock in the first 3 minutes is now down on the shares that they bought today. If you were in the IPO, you're up, right? It was $135 was the IPO, you're still up. But this stock was, there are people chasing the stock at 176. They're down 10% in 2 hours, right? This is the sort of thing that happens. Now, it could just turn around and go back right back up, right? I'm not here to call where a stock's going to go from 1 minute to the next, but these are the things you got to be careful of. All right, so that's that one. And now this one, my favorite for this week. We'll talk more about this in the future as well, because I mean, geez, it's almost 4 o'clock. And we haven't even gotten to Q&A yet. This is a Needham report. I happen to agree with this report. This was another situation like Crescendo. Look at this. This company, to me, is way too cheap. I've been following this company for very closely for 10 years and for the better part of 20 overall. All right. I remember learning about them back when a company called NetScout, NTCT, a competitor of theirs, and you see how NetScout is performing very well, because I'll tell you why in a sec. But back in 2007, NetScout bought a company called Network General. NetScout was based in Massachusetts. I was living in Massachusetts. I went to visit them with my mentor. We chatted it up with them. We bought a bunch of the stock. We made a bunch of money because the acquisition made great sense. In this industry, acquisitions are really easy to make a profit on. Okay, so NetScout found out about Radcom, covered Radcom back in 2016 from 10 to 20 back here, right? They went into a wait time, and now AI is demanding that the carriers, telecom carriers, AT&T, Verizon, etc., upgrade their networks to a true 5G, not just having 5G antennas on a 4G network. It's kind of cheating. We have a 5G network. No, you don't. You have 5G antennas, right? Where's your real 5G network? As they move to full 5G networks, which is really important for AI, there's a lot of functionality, we won't get into it this week, that 5G networks are really needed for AI, right? You're going to see more carriers moving to a pure real AI, 5G, and Radcom provides the service assurance software that makes sure those networks run flawlessly. And let's face it, if you are doing work with AI, you want flawless execution there, right? So, bottom line for what I'm going to talk about this week, we'll talk about it more later. Let you veterans out there do your own work on this one, right? Is the stock was doing well, just like NetScout. And then some influencer came in and said, I'm selling the stock. And the influencer had like 300,000 followers. And everybody said, oh, if he's selling the stock, I'm selling it too. It's an influencer. Okay? One of the 10,000 clowns. He's not a stock analyst. He's an influencer. He influenced people. The stock dropped 29% in 2 days total. Okay? Partly probably because he was selling out, and then partly for sure because he told people that he had sold out. So in total, you had a 29% drop, 30% drop in this stock in 2-3 days. And people not even realizing how much cash they have, what their opportunities are, how good the business is doing, what kind of products they have, how the products look in the marketplace on the basis of what independent third-party experts have to say, blah-de-dee-blah, blah, all the rest. All those things that the 10,000 clowns don't know because they didn't spend 16 hours a day for 10 years learning how to value a company properly. They know how to look at the chart. No offense if all you do is look at charts. If you're successful at that, great. But creates opportunity, all right? And I think there's one here. We'll talk more about it going forward. I'm going to bring more research to bear. But in the meantime, I wanted to let you know we got Needham with an $18 price target, currently 13. Speaking very positively here, you can pause this later on the replay and read it for yourself. We'll leave that there for another time as well. So, Chartorama. Let's go through some charts real quick. I was going to brag, but we don't have time for that, so we'll skip that part. Just take that to next week. Okay. Chartorama. Actually, you know what we'll do too is, I can't do two things at once. I'm just going to bring up a bunch of charts, and you'll be able to look at them. In general, I like these companies. I'm not going to talk about them. We don't have enough time this week. We'll come back to this stuff. But these are companies that, in general, I think, let me see. I like it. I don't need to show you that one. To some extent, at least. To at least some extent, I like every single one of these companies. Okay? So I'm going to run through them real quick, Chartorama, so you guys can get to see what these charts look like. So there's Clearfield. There's this stock, D-Box. It's breaking through some support level there. InView Systems. And I'll go to this right here so you can see more years there. Salesforce.com. Hydrate. Twilio. Nothing you really need to do about these, by the way. You're like the companies that I really talk about, those are the ones that you probably should really focus in on. But I just want to give you guys a sense to what my interest list looks like. Behind the scenes, stocks that I'm looking at. People come at me with names all the time. Mark, look at this one. Mark, look at this one. I'm showing you all these charts. These are names that I have already looked and decided that I should be digging deeper into. Or I'm like this name, I own a ton of this stock, right? I don't have time for your picks. I don't have time. Like, unless you have independent third-party industry experts validating the stock pick, don't send it to me. I need an independent third-party industry expert, not somebody from Goldman Sachs, not one of the 10,000 clowns, an industry expert. You know what that means? Somebody who works in the industry of the company that we're talking about, right? So when I put, what did I put on here? Did I already put, oh yeah, I already put this one right here. There's an independent third-party industry expert, somebody who worked in the semiconductor industry who likes this name, who thinks they've got something going on. That gives me validation from an expert because I have no effing idea if their technology is any good or not. How would I? That's not what I do. I don't know anything about semiconductors. I know what one looks like. That's about it. I don't know how it works. I don't know any of that stuff. I rely on experts for that. I do math. All right? So that's what I'm looking for. Evolve. This was great. I gave y'all this one. We made some good money on this multiple times. Iron, that's up to 60s. We talked about that before. I like that closer to 40 than 60. I'm sorry. Don't be mad at me. It's my opinion. You can have yours. Akamai pulled back to the 50-day moving average. I like that there. Okta. All right. Right? Look at that. I mean, this is a beautiful run. But there might still be a little more to pull back here. Right? I own some of it, but let's face it. I already showed you Radcom, Avex. This one's been a mess of late. We made great money on this twice, right? At the IPO, at 23 to 40, and then again from 23 to 40. We went 23 to 40 twice on this company in about a month, and it got back down to 23. Back in, and since then it's dropped to 20. That stinks, but so what? If you go 23 to 40 twice, and then you go from 23 to 20, come on, let's not complain. And they're still in great shape. Nothing's changed since, except the secondary that they put out there. More shares, more supply versus the demand, right? They put out supply, and that dampened the demand, and the stock gets hit. Doesn't change the value of the company dramatically, by the way. Just the supply demand, the liquidity. This one, where are my lines? There you go. There's some lines there. AHR we showed you. Watt we showed you. TSSI we showed you. Crescendo we showed you. GeoDrill I showed you. Gatekeeper I showed you. Oracle. Not too shabby. By the way, people killed this. This was a good quarter. I used to get paid big money to cover Oracle. Okay? Just Oracle alone. I was making 6 figures a year just on Oracle alone. I was covering dozens of stock, but this one alone was 6 figures. I told you when it busted above, this move right here, I said sell it, short this move. And the stock dropped 59%. Okay? I'm telling you right now, this stock got clobbered on a good quarter, didn't deserve it. The reason that was given, they spent too much on CapEx. Are you kidding me? Didn't we just finish talking about XAI and how Elon spent $40 billion on CapEx to build Colossus, and now he's making $26 billion a year renting it out, which is a tremendous return on investment? In a sane world, spending more on CapEx, in fact, not spending more on a CapEx should piss investors off. So I think that's a bad move. I don't own Oracle right now, but it is tempting with this pullback to the middle of this range. TSM, of course. I mean, one thing that's really interesting about this chart, and then we got one more, and then we go to Q&A real fast. Look what happened here. The internet bubble, these two squares, these two purple squares are identically sized. Okay, so from the bottom to the top, there was the move on TSM. From the bottom to the top, that's what the move looks like now. Okay, so there's still room to move. right? And if AI, and by the way, AI at this stage of the game, right now, AI is way, way, way more real than the internet was in 1999. The internet was not ready in 1999, especially not ready enough for this big bubble that took place. It wasn't ready. The bubble was it was a bubble and it was going to break. We knew it was a bubble. I've told you stories before. I had clients, right, at hedge funds where somebody from Wall Street, covering the company, right, Goldman Sachs would walk in and say, yeah, let's talk about I2. And the hedge fund manager would say, yeah, how high are you willing to let the price target go? He didn't want to know about the fundamentals. He knew it was already overvalued, right? The stock was at 60. He wanted to know if this guy was willing to push his price target up to 80. It's overvalued at 60. I just want to know if you're willing to tell people to keep buying it at 80. That's all I want to know. That's a bubble, right? I'm going to keep buying until something breaks, even though it's overvalued. That's what was going on back then. Here, I'm not so sure because AI is really, 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 really real. The value is real. And the spending that's going on is money coming out of the pockets of companies with tons of cash flow per year. And they're betting it all on AI because of what they're seeing as the results. And I'm included. I'm spending more on AI every month because of the results I'm getting that I'm giving to you as well. Last chart, Apple. The only thing I'm concerned about Apple, I would be buying Apple right now, but what I'm trying to figure out is what the impact is going to be of the shortage of memory. Because memory goes into their laptops, which are in super high demand. There is huge demand. If you listen to that podcast I recommended, you're going to hear that demand for CPUs in terms of quantity of CPUs is far outstripping the quantity demand for GPUs. That's why you see, part of the reason why you see Intel and AMD going through the roof. I heard a few weeks ago that even Intel's crappy chips are being sold out because there's so much demand for compute power. Not just in the data centers, but at home. I want a better computer so I can process my AI even faster. Okay? This is a complete technological upgrade cycle going on right now. All right? And that's great for Apple, except for the fact that the memory that goes into their laptops and their phones is hard to get and expensive as all hell. I heard one number as much as 45%. Some people that buy an iPhone in the not too distant future, 45% of the cost is going to be just the memory that's in the phone. Just the memory. Right? What about the screen? What about the buttons? What about the actual processor that makes it work? What about the software that makes an iPhone? 45% the memory. Right? That's a problem. That's the only thing holding me back right now. I'm trying to research if they have a way to solve that problem, right? Or if it's going to hurt them. I think it's hurting Nintendo. I know it's hurting companies like Bose. There's companies out there that I've heard from multiple parties are desperate for memory. Okay? I'm getting from multiple parties, companies, this company's desperate for memory. They're desperate for memory. Okay? Not just to pay up the high prices for memory, which could squeeze their margins or squeeze demand because they're going to have to raise their prices because of the price increase in the memory. So that hurts demand. It can also hurt margins. But that's if you can even get a hold of the memory. If you can't get a hold of the memory, you can't sell any product. And now you could go out of business potentially. It's a problem, right? I don't expect that out of Apple, but here we are. It's 4 o'clock. Woo, market's closed. Let's do Q&A real quick. And we'll call it a day. I hope you like this episode. If you do, give me the thumbs up. All right. If you didn't put 3 question marks in front of your question, put your question back in the queue. Okay. because I'm going to read all the comments later, but for the sake of time, we're going straight into lightning round, and I'm going to answer questions with the 3 question marks in front of them. Yeah, so that's what it was. SATS. Alejandro, bro, and you were the first. Thumbs up to you, Alejandro. All right. Yeah, they hold the rights to acquire 262 million shares of SpaceX. Based on recent SpaceX valuation, that stake could be $45 billion, while SAT's market cap is only $33 billion. How should investors think about that gap? Well, you should think about that $45 billion as having a 40% discount. Wall Street might only be willing to value that stake at $27 billion, right? Because that's what happens in these cases. It happens over and over and over again. I've seen it happen a million times before, where a company has a huge stake in some other company and they don't get credit for it, right? Not for nothing, but Sats has done great. Hope that answers that question. Put that in your notebook. It'll help you in the future. You'll see other situations like this. Frustrated TPCS holder. It's less now than when the war started. Alex has to go. What do you think? We're getting there. I've talked about this many times. My view hasn't changed. I think that will resolve itself at some point in our favor. This company is locked into these programs. It's hard to get kicked out. They do good work, so there's no reason for them to get kicked out of these programs. So I think this resolves itself positively, or we kick out the rest of the board, we kick out the rest of the management, and sell the company to somebody like GHM. I've said it many times before. Nothing's changed. You've said that if we hit single digits on the fear greed and below the red line, then it's effectively a green alert. What red line index should we be looking for in that sense? No, listen. So we're in a yellow alert, right? If we pull back below the red line and fear greed gets down to 10, that's a green alert, okay? And what red line index should we be looking at for that scenario? Any of them. So if IWM is below the red line and we get down to 10, then it's green alert on IWM. Same thing with the Qs. But if the Qs don't get below the red line, I don't care if fear greed gets to 0. If the Qs don't get back under the red line, it's still a yellow alert. And still be careful, because we're above the long-term fair value that I perceive for the market. Okay? Hope that answered your question. Listen to it again later, and it should make sense. How do I feel about oil? Oil's fine. I don't have a base case on oil because it has a lot to do with the geopolitics that going on out there, right? I wouldn't play with oil right now. I think it's going to do fine. I think demand for energy. AI is going to drive demand for energy around the world for years to come. So you can buy all kinds of this. I got pitched on a company, Talent Energy, right? It's an energy company, a utility, energy. You could buy all kinds of energy companies, XLE, right? It's been great. If you're that kind of investor, I'm not, but energy is great in general. Let's see. As SpaceX joins QQQ, I understand that funds will be forced to make room for SpaceX. Is that an opportunity to buy on the dip for NVIDIA and Google, etc.? Look, I don't know how much of that selling has taken place, but it's a good point, right? As SpaceX joins QQQ, it's going to be such a big percentage of QQQ that it'll force funds to sell other stocks in the QQQ to make room for SpaceX. And will that force those stocks to go down? Who knows? If there's enough demand to prop it up, maybe it's already happened. We don't know. Okay? Because from what I understand, SpaceX gets into the queues just days, not months from now. All right. But it is a logical, obviously it would be an opportunity to buy the dip. Whenever you have a dip in a stock based on supply and demand, so an influencer kills the stock, that's a supply and demand issue. That's not a fundamental issue. The fundamental value hasn't changed. So if the fundamental value hasn't changed and people have just panicked out of the stock or were forced out of the stock, right? If somebody is forced, if you're out in the street and somebody is like, they lost their job, it's their rent is due, right, and all that, and all they have left is this ring that they paid $500 for, or whatever, right? And they're forced to sell it so that they can make rent, and so they're willing to sell it to you for $250. The price of the ring just dropped from $500 to $250. The price just dropped 50%. So if you see a stock price drop 50%, right? If the ring is 50% off, you buy it. You're like, this is a great deal. I'm going to buy it. But when a stock goes down 50%, people go crazy. Now, usually when that happens, it's because something extreme happened to the company. But during COVID, a lot of stocks went down 50% on the basis of, supply and demand for the large part, right? Once we understood that we weren't all going to die, and they head right back up. So you have situations like Radcom and Crescendos where you see, it wasn't 50%, but it's 30%. That was 50% of its enterprise value, I bet, because they got a ton of cash. So this goes down, the enterprise value drops 50%, and people lose their minds and panic. Instead of saying, yeah, I'll buy that ring for $250 because it's worth $500. It's a lot easier, right, in the real world than it is on Wall Street. But it's the same thing. Why? Let's see. Welcome back. Was wondering if anybody in your inner circle attended or had notes on the all-in liquidity event. No. Not that I know of. Hey, Mark, I'm not trying to pump a stock, but what are your honest thoughts on ServiceNow? Seems to be undervalued. Yeah, I like ServiceNow. Look, software is out of favor, right? I bought some ServiceNow as it dropped down to this white line, and then it bounced to the 200-day moving average, which when it dropped below the 200-day moving average, right? When it's above the 200-day moving average, the 200-day moving average is support. So it usually will bounce up off the 200-day moving average. But when it crashes below the 200-day moving average, the 200-day moving average becomes resistance. And sure enough, as it crashed here and got down to the white line, that was a nice buy opportunity, not back up the truck or anything, because I really don't know how this is going to play out. AI is going to benefit ServiceNow and hurt ServiceNow at the same time. I think it's going to benefit them more than it hurts them. That's my gut feel, right? So I took a shot at it about $100. It popped up to 138, hits the 200-day moving average. I get out because I feel like there's going to be resistance. And by the way, that's part of the reason why these lines work, right? Is because so many people are watching them. I don't care about $138, but I do know that other people do. I know that other people care about the 200-day moving average. What do I care about a 200-day moving? What does 200-day moving average have to do with the value of a company? Nothing. Zero. Zip. But everybody watches it, so as a result, it becomes important. And since I knew that, I was like, well, I just made 30-something% really quick. Let me get out and see what happens next. And it popped back down. And guess what? I own ServiceNow again. Right? I bought some ServiceNow in the last couple days. I'm not going to back up the truck on it though, right? There's a portion of my portfolio that is allocated to names like this. And there's a certain percent of my portfolio that I'll put into ServiceNow and CRM and all that stuff. There's a certain percent of my portfolio that go into these names like Radcom and et cetera, et cetera. There's a huge percent of my portfolio that go into the names that I like over here, right? And then there's another piece of my portfolio that's managed by a professional money manager. I have a registered financial advisor that works for me because I can't manage all my money. That would be a full-time job, and I'm supposed to be retired. My wife would kill me, justifiably so. SpaceX is overvalued on paper. Who says? I didn't say they're overvalued on paper, and nor should you. Nobody knows. Nobody knows. Because on paper, fair value is determined by DCF, discounted cash flow, future cash flow. And nobody knows what the future cash flows are. There's just best guesses as to the future cash flows. If you ask Goldman Sachs, I think it is, there's two brokerage firms that I heard about that had already put out price targets that are above where SpaceX closed today. Okay? There are already price targets above 163. So on paper, those firms are still think SpaceX is undervalued on paper. Anyways, rest of the question, but it has a cult following and a good story. Do you take cult following potential into account when assessing a company? Yes, and the key word there is potential. Okay? SpaceX already has a cult following. I don't like that. I don't want to be part of a cult. But if it had the potential, if it did not have a cult following, but the potential to gain one, Air had the potential to gain a cult following. I told y'all back in the day, I backed up the truck here, and there was an EV gold mine at $2. At $2, nobody knew this company. It was not a cult stock, nothing. But because of EVs, and then certainly here with AI, right? AI becoming a gold mine. I wrote this the day that it became an AI gold mine. Okay? And that gave it the potential to become a cult stock. Yes, I do take that into account, right? If the stock has the potential to become a cult stock and is not yet a cult stock, I will take that into account and maybe I will buy more shares if I love the valuation. Okay, so it will affect how much I buy of a stock, but I still have to like the valuation. That's just me personally, because I don't like to gamble like that. I like to have the cherry on top. The potential for a cult following is a cherry on top of a nice sundae. This is going to be a delicious sundae. Somebody wants to put a cherry on top? Even better. Hey, Mark, are you following Nokia? I'm not. Do I see the potential for Nokia to benefit from AI? Absolutely. Even though I'm not following them. But technology, just all technology. And Nokia, definitely, I mean, I know Nokia from way back. And if they're anything like what they were in the past, yes, the answer is yes. What's your recommendation for percent cash allotment? I don't answer that question. That's beauty in the eye of the beholder. Ask your registered financial advisor that question. It's different for everybody. Okay. During my because yeah, some people want to go all out. Some people will be on margin. Some people will be 50% cash. I've got a lot of cash right now. I'm looking for bargains. I feel like the market's going to keep going up, but I'd like to keep some cash on the sidelines in case we get a nice juicy pullback. Right? Even like more than what we've seen. And I may come to regret that, but that's just me. That's a decision that I make. You got to make yours. I just noticed how my hat doesn't match my shirt. It matched my sweatshirt. Beautiful. Thank God I'm handsome. During my early days following you, I over allocated positions. When fear and greed is below 10, do the rules let me buy more even though I'm already oversized? That's a dumb question. That's a dumb question. And you know it. Because if you've been following me that long, you know the answer to that question. I heard an industry expert interview the CTO. Okay. You gotta tell me where the interview took place. Okay. So the CTO of EXYN, tell me where the interview took place. I'll be able to judge if that was really an industry expert. And if it was, then I'll watch the interview. If it wasn't, so be it. Moldova is where my wife is from, and we watch you every week. We have made over $400,000 in the last 18 months from your picks and listening to you. Thank you. That's not a question, but I love this. This is what this is what I do it for. You see that? This is what I do it for. You're welcome very much, and salute to your wife, your Moldovan wife. Mulțumesc frumos. Can you clarify your view on hedging in the current environment? clarify. Let's do that on another show because I'm way overdue to do an educational video, but I'm also way overdue to end this episode. Can we see the ZM chart? Yes. I already showed you that chart. ITMSF chart. That's what it looks like. This line is probably more likely than this one, by the way, at this point in time, based on everything that's happened. Not sure if you mentioned on the show yet. Could you share the AISP chart? That's what that looks like. They've got some interesting prospects, some good research in the chat rooms about them. Do I have a chart? I mean, of course, everybody has a chart for everything, right? Yes, I've been following Microsoft. I've been covering Microsoft since the 90s. Is it better now to lower positions in non-movers? Oh, no, 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 no. Guido, you need to go and listen to this. You need to read this. You need to watch this. Okay? Because that's like that question doesn't even belong. Like, yeah. You'll understand. I'm doing you a favor by not answering the question and telling you to do what I told you to do. Go do that. You will become a richer man in the future if you just do those three things I told you to do. IDN, consolidating at 4, and their moat in AI fraud prevention is still real, I believe. Do you still anticipate lumpiness in their business? Yes, I still anticipate lumpiness in their business. I don't own any shares of this stock at this moment. They're on my list of companies to get an update on. Okay. But I got out at 669, I believe. We made a nice profit on them, and now it's $4, so that was the right move, right? Uh, do you see ServiceNow or Salesforce as more attractive? I don't know. Um, they're to me they're pretty equal, right? Like, look, see, they look the same. They're both at the white line level, right? So that's technically that means they're kind of equal in my book. If Intermap loses the Indonesian deal, is it still gold mine, and should we act accordingly if it reaches the green line? Yes. I'd be surprised if that happens. By the way, there's multiple Indonesian deals. So, but yeah, I own Intermap right now. Okay, we're down to what one? No more questions, folks. No more questions. We're down to the last two. Dario talks about biotech and especially peptides being one of the biggest beneficiaries of AI. Have you done some research on any peptide names? No, and I will not. And that's not, I don't mean like, hopefully I'm not snapping at you. I'm not. I'm just telling you, I don't know anything about peptides. Like, I know about technology. I know experts in technology. I don't know experts in biotech or peptides or anything like that. So yeah, no. But what I will tell you is, I have strongly considered, and I still want to do this. I want to find some people who really understand, the pharma industry, and I want to own some pharma stocks because I think like, like Glaxo or something like that. I don't even know how to spell it right. I don't even know which, right? But I know that these big old pharma companies that have giant proprietary databases of information that nobody else has, I think AI is going to unlock tremendous value for those companies and enable them to make more and more drugs faster than ever before. So big old pharma companies trading at relatively cheap valuations, I'm going to want to make a small piece of my portfolio of that, but I'm going to need somebody to help me construct that because I don't know anything about pharma, and I don't know any experts in that industry. Somebody asking about Arista Networks near the high there, and that's it. So there we go. 420. How perfect. On the day that Elon Musk becomes a trillionaire, we end the show at 4:20. Not so bad. I thought it was going to be much worse. Hopefully, my wife doesn't kill me for going 20 minutes over. But there you have it. I'll have a lot more for you next week. I owe you an educational video. We will make that soon. But in the meantime, I think this has been a hell of an adventure. Hope you agree. Give me that thumbs up if you agree, and just spread the word. Let them know that somebody's here helping you out, not like the 10,000 clowns, not like CNBC, not like the colleges. Every Friday, it's Money Mark, it's Stock Talk Live. Have a great weekend. Take care. Time for bed. What is it? It's 11:20 here in Moldova. We're 7 hours ahead. For the next couple months, I'm 7 hours ahead of y'all. This is going to be tough. My baby went to bed. I kissed my baby goodnight about 2.5 hours ago. It's crazy. We have so much to talk about next week. My God. Yeah, we couldn't get to. This is what happens. You skip a week and everything piles up. And